BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Let's have a look at all our favourite stuff. We'll start off with DXY, to be honest, and then do a quick look at Euro. They're basically the same thing, doing the inverse of each other. So the DXY is looking pretty weak now. Obviously, FOMC did its thing, and that's impacted this particular chart, Forex, first. And with that comes further downsides. We will probably be looking for this to retest some of these prior lows, maybe not all the way down to, well, maybe not down to the bottom of the range, but to be fair, at the moment, I mean, it's fallen from the sky. Take it to the 4 hourly. We don't really have any let up, no bullish divergence, with a fresh death cross coming in as well. So that's pretty sweet. So the FOMC did something good for us for a change, and the markets are responding continuously. So we knew that they'd priced it in, but they continue to run in the right direction. The Euro, fresh golden cross coming in on the 4 hourly as well. So look, with these crosses comes continued momentum, continued trend, but also they offer a bit of a downside to retest those to see if they are genuine, because they're not always, obviously, but for the most part they are. Last time we had a golden cross on the 4 hourly, we basically rallied on all the way up. We retested a 50 exponential and more or less found support around, give or take around that. So I'll be looking for the same sort of thing to happen again. Like I said, we could look at this from, a different perspective. I'm not much of a formation trader, but you could look at this as one sort of crooked cupping handle in a way. And if that's the case, then yeah, fine, fair enough. We don't have any major pump signals here on the daily or anything like that, but we do have moving averages all the way below us, more or less in the same place, in the right place that they should be. So basically from next week, we'll be looking for supports to be retested back down to 108.2, which is obviously a fair old drop from where we're at right now, or higher as the moving averages start to trail up. So it doesn't look like Euro can actually move on to a new local high, and that would match the fundamentals of the ECB going, oh, we're raising rates by 50 basis points, and the Fed saying we're paused, maybe a 0.25 next month. We'll see. So fair play. And that has allowed for S&P to continue its rally. So the rally is extended. It has been, and it still is, a good-looking chart, to be honest. The bearish divergence each time has been cancelled out. So probably say this is one of the most hated rallies I've seen. Everybody's calling crash and dump and catastrophe for almost all of the way up, really, to be honest with you. And now we're really breaking the formations of the higher term timeframes, and we've got ourselves a pump signal on a weekly. Now, pump signals on weeklies are, when it comes to itchy cloud pump signals, not a big fan of those sort of things, but it is there. So continuation on this rally to what could be 4,500. I'm all up for that. I am all up for that, and again, no bearish divergence on this on the higher term timeframes. Everything's pointing up pretty significant stuff, which is why I've been adding to my pension plan since Christmas, really. Stocks and shares pensions. Stocks are the ones that have been really, pushing out the gains. Look at C3AI again, looking awesome. To be fair with you, I do want to take some more profit on this one, on this rally, probably today towards market close, just before the Patreon live stream. If you want to join that, to be honest with you, there's links in the description below, and you can join me on the live stream. So that is more or less an overview, a crude but basic overview of traditional markets. So continuation on the higher term timeframes, it would appear. However, like I said, or something like the Euro, for instance, maybe looking for a bit of a pullback, maybe towards the end of the day, as we are looking a little overextended, being born outside of Bollinger Bands and whatnot, and offering retests later on next week of some of these lower moving averages all the way back down here. And so look, it is good. It's definitely good. It's very constructive, and it's a decent response from this 200 exponential, but Yeah, that has, especially yesterday, these last 2 days, been pretty bold move. And actually, finally, we'll have a look at gold. Gold moved from, well, we had a wick down, but basically, we've basically moved from our support, 1940. Pretty sweet. And yesterday, more or less closed above the Bollinger Band. Today, gaining support on the Bollinger Band and the 10 exponential, looking like it wants to actually do some recovery time. And you and I all know that gold and Bitcoin have a decent correlation in the way that their charts are positioned on moving averages and respect each other. So they look more or less the same. If there's a correlation out there anywhere, it's going to be between the two. It's not exact, it's not precise, but it's way more than stocks. Obviously, we can see that just from the consolidation recently. So easy consolidation from the peak all the way back in May, down sideways. So let's have a think about Bitcoin. So a peak in April, and it's still consolidating. So very similar in the way that they peaked after a significant rally, and stocks continue to run, which is why I said that there's likely to be some form of rotation, I believe, from stocks into commodities and possibly Bitcoin. But obviously, yeah, crypto Bitcoin is a little bit, it's not very popular, is it? But remember, be greedy when others are fearful, and there's a lot of fear in this market right now. So let's think about Bitcoin's charts particularly. And look, again, with or without the lawsuits, the SEC, and all the noise and nonsense, we're still trending within the descending channel, which again is a bullish formation, but we're still within it. The last 2 days, bang, bang, basically on the bottom of that trend line there. So holding support within the formation. It's not the end of the world. My general expectation of the chart is that we find our way into the channel with this 200 simple moving average, which leads us towards the end of this month. So what are we, another 10 days or so thereabouts before we actually navigate our way to a particular area of significant bottoming zones, really, if we continue with this current direction, which I don't really see why we wouldn't continue with the general direction. It is a downtrend still. There's nothing massively bullish about the way that this looks right now. The 4 hourly, again, as much as the bounce was sweet from the bottom of the trend line, it's only just gone and got rejected on the Bollinger Band center. Things might change if we break above 25,660 and hold above there, find ourselves a support, and the Bollinger Band starts to point up. We get support on the moving average on that 20 on the 20 moving average on the 4 hourly that we can find support on. And even then, we're only really looking to see if we can move up to 26,600, which is the breakdown zone, which is also going to be highlighted by a 200 exponential, a 200 simple on the 4 hourly. And from what I remember, I think that's where the daily Bollinger Band is as well. Yeah, it is. So a lot of mega resistance above us at around that 26,600. That kind of area is like a big deal for Bitcoin right now. But soon, if you think about the end of the month, moving us towards like the another 10 days, 26th, where the 200 simple moving average will creep in here. The top of the range is going to be 26,600, and that is going to be like a really pivotal area to break, especially if we find our way to the bottom of the channel. And again, this is just like the best setup we could hope for in with what we see right now. It doesn't mean that this is going to happen, but if it were to happen, this would be the greatest way that it would play. So we fanny around on our way down, up, down, sideways within the channel, find our way to a bottoming area roughly around the mid to low 24,000s, which again would be the bottom of this channel. It would also be a mega support with this 200 exponential, and also a highlighted area of a horizontal, roughly, like I say, we'll got 24,003, 24,400, and then bounce up towards the top of the channel, which is going to be 26,600, and that breaks. And then that break will be a break of not just the descending channel, it'll be a break of the this major area that we were struggling within on a horizontal basis, and that would lead to a major breakout and a new local high, and maybe even a significant rally after that, so up towards the upper 38,000s or so. And this would be helped along with just general dollar weakness, gold strength, and possibly a rotation from stocks into, like I say, commodities, which is absolutely plausible. The problem that people have in traditional markets right now is that they really, this is why I'm calling this the rally on stocks is like the most hated rally I've seen, people really knacked off about not being part of it because they're expecting this huge catastrophic dump and crash and collapse, and they're stuck. They're stuck in cash. They're stuck in a weak dollar. Yeah, and that is not a good place to be. Never be all out, never be all in. But people who are all out, expecting huge crashes to come, have basically missed out on a significant and quite long 6-month rally, quite a bull market if you want. It's definitely been continuous for most things, right? Most things have had a relatively long, continuous rally since those areas. Bitcoin, crypto for the most part, commodities also, maybe not oil, but gold obviously, and stocks. They've all done extremely well for basically a 5 to 6 month period, and lots of these people have been sitting on the sidelines in cash. And they're like, right, well, I don't know what should I do? I'm too scared to buy it. It just keeps going up, blah, 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 blah. We've all been there. Look, we've all been there. And so if there is going to be some kind of rotation from stocks to commodities or tech, which is booming at the moment, into maybe like value stocks or whatever, then that is going to be the next state of play. And if we start to see that rotation, it's going to cause like a major rally because there's a significant amount of money that needs to be deployed. There's also a significant amount of gains that have been made that would like to be redeployed into other areas, and this is how markets work. This is why we would always look at stuff like Bitcoin dominance, because within crypto you get rotations, obviously, from Bitcoin into altcoins and altcoins back to Bitcoin and blah blah blah, just to make the most of the entire market. Now the traditional market is exactly the same, apart from you've got a huge amount of areas that you can redeploy. It's all part of the game. And I think that the next game will be a move into commodities, gold specifically, and Bitcoin most likely benefit from that as well. Altcoins may be dragged up, by but they may not, because they are still like very, very unpopular things. If you buy into them for the long term, just make sure that whatever you're buying into isn't an absolute pile of shite, because it could be. So. Long story short, we're still consolidating on Bitcoin. It is still looking good. So far, if you ever wanted to retest this descending trend line of the channel, it seems it's been still relatively appropriate to buy those dips. Don't expect it to be the bottom, not yet, but it's still an educated guess for a bounce, and maybe even a decent opportunity for a dollar cost average on the way down. For the moment, look, it's okay to expect continuation if gold wants continuation. But there's no clear indication that that's what we're going to get, not at this exact level. If you're really looking for major continuation, it is going to be above that 26,600 area. Closures on a 4-hourly, or definitely a daily, would be best. But my general vibe on how we see this chart playing out is that we may move up to that level, we may move up to the top of the channel, but we're going to move back down again. And between here and the end of this month, we'll find ourselves to a new lower low, which might be the ultimate dollar cost average attempt, where we then find our way to the top of the channel and then break from this horizontal and all the moving averages and the formation all in one go, with continued strength on gold and possibly a rotation from stocks as well, which have obviously been on a tear up for 6 months. Right, that's basically it. Now, if you want to join the Patreon live stream, there's links in the description. If you want to set up a BYDFi account, links in the description for that as well. They've got meme coin trading competitions going on at the moment, with loads of free stuff as well for setting up your accounts. Anyway, other than that, I hope you have a nice day. Take it easy.